Welcome to Stockradar, Stocks on the Move for another week. Today's date is the 1st of December 22. Christmas is looming and I've got my t-shirt on. I haven't worn this one for quite a while, but we've seen this market lift off that 6,500 level. It's now above 7,300. It's having a good day today. We'll come back a little bit today. A bit of excitement, it always happens when the market takes off from last night. It looks like the inflation genie might be back in the bottle a little bit. So we can look at a little bit of taming of the interest rates at the moment. So as I said before, I've got this t-shirt on, which I haven't worn for a while, which is really, we're getting that wave happening again. Maybe the last 12 months of slow erosion of the market has been a difficult one. Don't forget to check out our trading centre for an update on all our covered stocks in the ASX 200. I'll just cover a few for you today to give you a taste of what I do. We're seeing plenty of stocks triggering new entries and many beaten down leading stocks highlighted on this week's Radar's newsletter, which was out yesterday, such as Fisher & Paykel, DMP, which we know about, Car Sales, Macquarie Bank. There are lots more in the newsletter. We'll have a look at some of these in trading tactics a bit later on in this video, okay? Corrections always provide great opportunities if we're prepared to back ourselves. And we've been accumulating stock picks slowly over the last couple of weeks, and it's been really interesting to watch how it's happened. We climb this wall of worry, but we take the signals as they come, as they present themselves, and that's what you've got to do. And now we're being rewarded for our efforts. So this week we also dig a little deeper, in the newsletter, I also dig a little deeper into the win-loss ratio of trades and dollar values, which I touched on a bit last week, but there's a bit more guts to that in the newsletter. The macro view also looks at providing the clarity provided by going back to basics and to find our solid opportunities, where you get so embroiled in the baggage of ups and downs, ins and outs, all sorts of things happening overseas, inflation rate, all sorts of things. It's very hard to know what to do sometimes. So to find the solid opportunities, it's back to basics. Our scanners have unearthed a couple of good stocks in the last couple of weeks, such as AMP, such as Stockradar, and many, many more. In fact, our annualised rate on our 31 stocks which we've got now is about 27%. So that's not looking too badly. It's the last days of our special offer, which I've got for you guys at the moment. I'm offering a 3-month bonus for a 12-month subscription and a 24-month bonus for, a 4-month bonus offer for a 20-month membership for those who join before the 5th of December 2022. So take advantage of that. There's lots of new stocks hit the radar and our scanners. Okay, so let's have a look at the top 10 trades this week. First off, we have A2 Milk, which is a recovering stock. AMP, which is going along nicely, and you can see it there. Finished at 136 yesterday. It's up a couple more cents today. CNU, TNE, which is topping new highs. CPU still going ahead. LIC, Liontown, Mineral Resources bouncing again. New Farm going well, and also Pro Medicus. So it's cross-sectional of stocks here. I still don't have any sectors actually in the trending zone at the moment, because we had so few stock picks, but that may start to occur. But we have got a smattering of good stock picks amongst those, the top 10 there, which you can see. Okay, so let's have a look at some of the overseas markets. Okay, Dow Jones. Okay, we're seeing a recovery there. Okay, it's now bounced up. It's looking a lot like our market. It's now moving towards the highs again. We've got some good volume through here. Pressures are easing on the momentum index, so that's also looking okay there. Nasdaq, the laggard here. The tech stocks had a good night last night, which is good to see. We're trying to base out down around here. Probably are. We've now got downtrend lines, moving averages to contend with. We need a bit more volume, and momentum is starting to pick up a little bit here. So we're starting to see that turn, which happens all the time. We get brought in the day-to-day stuff. If we take a step back and just have a look at what's happening in the weekly thing, it gives us a much clearer picture of what's going on. So there is a slow turn happening on the Nasdaq there, which is great. Okay, gold is really just responding to a bit of strength in the US dollar, so it's bouncing a little bit, not really much volume there. You can play the gold stocks if you want to, but I'm not too keen on that. Copper, apart from one which is Perseus. Copper, well, it had a breakout and some very good volume here a couple of weeks ago, but it sort of fell flat one week. It's holding up okay. I'm not too sure exactly what happened there, but it's come back into here. I think, it's still starting to recover from this move. We've got some fairly heavy resistance through here at the moment. So copper's, is probably going to be better. You've probably seen the lows for the moment. As to upside, we'll have to wait a little bit there. And Brent crude, now I think it had a bit of a rally last night. It may not show up on my charts yet, it may not be updated, but it's still within that range, you know, R1, S1, $100, $80. There's some pretty heavy selling the last few weeks, but it looks like it may have held. Always a good sign when you've got heavy selling in the market holds in these areas, and now it's bounced, so that's a good sign. Okay, the ASX 200, well, there you have it. It's broken through this resistance area. We're not far away from the highs. It's looking a lot better. You know, we've really had a fairly strong period since 6,500. We're now up to 7,300 today on the screens there. And it's been a very strong rally. Apart from a couple of weeks down, it's just been straight back up again. So it doesn't look too bad. So shouldn't be worrying too much. And we do worry all the time. And that's a natural human trait, unfortunately, but we're going up, and that's really what I'm focused on, the prices, and so the ASX 200 is not looking too bad. If we go and look at the stock pick count, it's up 3 this week to 31, so 3 new stocks in there, 31 stock picks of 162, no ETFs at this stage, so the stock pick count is starting to grow. Again, it's not across the board, so we've got to be careful, but the ones that are going up nicely, and that's where we want to be. Okay, so that is the overseas markets in the ASX 200. So now let's get into the meat of it all and have a look at a few good stocks today. Okay, first off, we have Macquarie Bank. This is one of the stocks I talked about that's been sold off quite badly. It's now come back to a very big long-term support level. It's bounced nicely, and look at this lovely volume going through here at the moment, which looks great. And we're now getting this easing as well on the momentum index. So this is a really good sign here. Again, I'm going to talk a little bit about this in trading tactics, about not getting too excited in the first move higher for certain reasons. But anyway, Macquarie Bank is looking good. Its trend intensity rating is back up to -4, so it's still not positive yet. But we've now broken the downtrend line. We've broken above the average. We've got some volume. We just need a bit more of this moving up yet, and we need a more clearer reversal pattern. Okay, so Macquarie Bank certainly around S1, it looks like very good buying. That's about $150. The other big leader I want to look at is Goodman Group. The property ones are now, they've had a big bad sell-off lately. Dexus, Goodman Group, Mirvac, they've all been pounded. $26 down to about $16 for Goodman Group. So it's recovering at the moment. It's still trend intensity -6. So we're still early stages with a lot of these things. For those that like a buy weakness opportunity, you're probably seeing it right now. I prefer to take the conservative view and wait a little bit for my trend reversal to happen, but this is a good point to happen. So if I just move this up a little bit, you can see here there's very nice volume here that's been attached to this rise. We've had some heavy selling which pushed the price down. Okay, and now they've decided here, this is the old highs back here, and an old good support area, and now buyers are back into this one here, pushing it into this moving average and downtrend line, and this momentum sell-off is easing. So this has been pretty negative all the way through, but we're certainly seeing a change here in this Goodman Group. So the property stocks are certainly worth looking at again at the moment. Technology one, well, it's done very well. We had a slow start after our entry on this one here. It came back a bit, had a bit of a struggle. There wasn't a huge amount of volume, but it did come back a bit. But now we're starting to see this one come up. And if I just blow this up a little bit more on the volume side of it, we can see again, good volume across here, momentum's good, it's above the average, and it's making new highs, which is a really, really good sign. Trend intensity rating is +10 for Technology One. So there's not much more to say about this one. Again, a lot of stocks that come back, like to this big old highs here of support, well supported, and they've fiddled around here quite a bit, and that's a good sign because that really creates a bit of solidity behind the rally that we're seeing at the moment, and a new high would be a great thing for Technology One to achieve. So excitement on that one as well. Treasury Wine, well, it's also been a slow grind higher, but we're now getting this move here, and we can see here, let's just scroll all this way down. Treasury Wine Estate, its trend intensity rating is +9 now. It's making a new high for the current move. Okay, so the lower highs and lower lows which we saw here were reversed above here to higher highs and higher lows, and that's a really simple filter to use when you're looking at charts. You know, there's lots of indicators and lines we can draw, but just the higher highs, the lower lows, lower highs reversing to higher highs and higher lows is a really good sign, because that shows the controllers going from the sellers to the buyers. So now we're seeing this slow grind high, a bit slow here, but we're seeing a bit of volumes appearing here. The momentum is positive, it's above the average, and it's making a new high. volumes can be a bit fickle sometimes. That's why I use the weight of evidence and the trend intensity rating. So volumes are always a little bit tricky sometimes because stocks can go higher on very light volume sometimes just because the sellers aren't there. So anyway, Treasury Wine Australia looks pretty good. It's back into an uptrend, making new highs at the moment, and it's an exciting stock as well. It had a lot of trouble in China there for a while, but it's changed its tack and it's now moving ahead well. IGO, I find these tough sometimes, these stocks. They really can sort of whip in and out and make it very hard to trade some of them. But anyway, for the moment, Independence Gold is doing well. We've had a good entry in this one. The trend intensity rating is +8 on this one, and it's come back to this support here recently, and you can see this huge volume here, which is a really good sign here. So the volume is very high, which means there was also a lot of selling there, but the buyers were able to absorb all that selling at this point here, so they're quite bullish on this one here. So I don't know what IGO is doing today, but it's certainly a good sign when I see that volume when it comes back to support like this. Momentum is already very strong, so it's looking pretty good. Independence Gold. Okay, so the next one I want to look at is Brickworks. Had a tough time, like a lot of stocks lately. We've just had a little bit of a bit of uncertainty regarding inflation and interest rates, which has sort of pegged stocks back a bit. But the confidence is returning again. The momentum is returning, which is what we want to see. So Brickworks. Trend intensity rating is only +4. It did break up back here, back in October, early October, and then we saw a bit of a correction down. Didn't trigger the stop, so we toughed it out. It remains above the stop, and it's now starting to rally again. I presume Brickworks is probably up again today somewhere. So yes, it's up about 20, 39 cents, 40 cents today. So it's looking a bit better again, Brickworks. You know, what can I say here? This is really slow. This is just a slow turn, this one, a trend reversal. The moving average is still a bit flat. We really want to see that start to turn up a bit. Volume is not fantastic. Momentum is just starting to kick into positive zones. So trend intensity rating is still only +4. So by no means are we out of the woods yet, but we are getting this change, as we can see here, from lower lows and lower highs back to higher lows and hopefully more higher highs here, which will define an uptrend for us. So Brickworks, another one, if you're a Brickworks follower, a Milner follower, then that's probably a good opportunity for you for Brickworks. Okay, Domino's Pizza, which I'm just going to go back in a few weeks just so we can follow this bottoming pattern which is happening at the moment. And we can see last week another huge amount of volume went through there. This is all fantastic signs for Domino's. There are still sellers there, don't worry about that. When markets turn and they start to rally, people are quite quick to get out, especially if they bought up $140, $150. They're quite happy to get out on any rally. But this volume here and the prices going up is a very, very good sign. We're still yet to break the downtrend or move above the average. This is still negative, so a long way to go yet. And bottoms can be fragile, so we've got to be careful. But it's trying to carve out a bottom above long-term support. And often buying, you know, I have a lot of talked about clients this week about getting into some of these stocks at these long-term support levels, and it's a really good strategy. You know, especially for the good quality stocks. When the market thumps these stocks down, it's a great time to get into them. Okay, I just be a bit conservative and wait a little bit. Okay, Ansell, which we saw a couple of weeks ago, slow grind. We saw this sort of inverted head and shoulders type pattern occurring here, and it's a lightly traded stock. But trend intensity ratings now move up to +6. It'll probably move higher again next week as we're starting to edge our way higher out of this correction or this reversal zone here, and we can see the control shifting from the buyers. From the sellers to the buyers here, going a lot of volume's always a bit tricky with Ansell, but it's above the average. This is starting to move above zero. This rating's going to start going higher again in a minute, and there's plenty of upside in Ansell at the moment. It's a good health stock. Health is quite high on the trend intensity scale. It's not one of the green ones yet, but it's in the upper echelons of the sectors at the moment. So that sector, which has been beaten down pretty badly, CSL, Cochlear, Ansell, Sonic Health, that may be about to change. But we'll keep an eye on a lot of those stocks. But Ansell's one of the first ones to start moving. Okay, I thought I'd have a quick look at BHP today. I haven't gotten to this one yet because it's just been such a big resistance area at the top up here. I haven't really wanted to trade this one. Some people could have taken this as a reversal pattern, but I really wouldn't look at. It's no new lows here, and we've moved above this high here. But really, this is the really key area for me for it to get through to say yes, it's going to go high, and it may well go higher. But I'm quite happy to wait at the moment and be patient and be conservative and be clever. We've got some good volumes going through here now. So the buyers are starting to come back. The momentum is better and the price is looking better, but I really need to see it higher yet for me to do it. I don't really mind about what price levels they are. I'm only looking for the price movement, for whether it's from $1 or from $50, I don't care. It's the movement in price that I'm looking for, and at the moment I'm not getting a sign from BHP that it's ready to move. I'm getting evidence starting to build, but it's still not quite there yet. Okay, so that's BHP, which has been a good stock which we've all wanted to get into. Now Fisher and Paykel is the one I talked about. I'm going to have a look at this a bit later on. It's been another beaten down health stock, really slammed down from $34 down to 16, so almost a 50% correction on this one, or 52% down. I don't know if that's quite right, but it's around 50%. We had a good rally there this week. I'm not too sure what it's doing today, but we've got this good sign here, and all of a sudden we've had this huge wave of selling, pushing this price down, and now all of a sudden the sellers seem to have disappeared, and the buyers are pushing this up very, very easily. Okay, so they've pushed it up from 16 up to about $21, $5 pretty quickly, and not a lot of volume. The volume's certainly a lot better. It's a good demand spike. We just haven't seen one of those for a long time, since back in the old days. But it's certainly a good sign that this is a bottoming sort of area. Momentum, downside pressures have eased for sure. It's now moving above the average, so the picture is starting to build there on Fisher and Paykel. So its trend intensity rating is still only -6. Again, gives us perspective and not to get too carried away, and I'll tell you why a bit later in trading tactics. Okay, now one other one, really good one I've got for you, and we've all been waiting for this one, is car sales. Now it's come down here. It's had a big support level at about $18, and we would not want to see it go down below $18 because that would be a bit tragic for this one here. However, what we're seeing is we're seeing a bottom here at $18. Then we saw another rally on some very good volume. It then came down on sort of some mixed volumes and quite high volumes there, and did push the price down, but we've had another good workout of this support level, and now we're seeing the volumes come back in and push this straight back up here. So R1's a pretty key level for me. We've had another challenge to the lows. It's supported well, the volume's been good, and now momentum has also started to turn. So this picture is really looking good. Trend intensity rating is -1 there for car sales. For those of you looking whether to get back into this internet sector, technology sector, or car sales, whatever it might be, it could be time. So this is looking very good. So keep an eye on this one. Keep an eye on the trading centre for the signals on car sales as to when it moves off. Remember, we've got to be careful. We've got to build the evidence. We can get very caught up in excitement, and today's a really excitement sort of day. So we've just got to be careful about that perspective, which I'm always talking about, which is very important. Okay, now I've got two other little stocks for you. One is AUB, a little stock that I don't cover, but I just thought it might be interesting for you to have a look at it. It's a broking business here in New Zealand. It's just a simple trading pattern. You can disregard anything about the stock itself, but this is a price action. It's had a rally, it's had a pullback to a higher low, and now it's making higher highs, which creates a trend reversal. Okay, so it breaks above the resistance point. Volume is good, momentum is good, so it looks like it's headed back to its highs, if not further. Trend intensity rating is +10. So that's just a little one for you to have a look at. I showed you Tieto Metals. That was in the newsletter, I think, a couple of weeks ago, which is up 16% over the last month. And this one looks like it could move off pretty well as well. So just a simple picture there of a trend reversal. And my last little stock, I'm going to go out on a high note. AMP, which again is up again today, I know. It's just been a great stock. It's performed very well. We've seen this, we've got a big tick of volume here, so it hides a little bit of this volume down here, but it's now had a break here, and this has been a very steady rise, a very good showing of demand here. It's pushed the stock high. Momentum is very good, as you would expect. It's hard to get a hold of a lot of stock at the moment, but the volume is healthy enough. So it is still giving us a trend intensity rating of 10. So it does look pretty good. I'll buzz up a little bit more just so you can get a look at this, see the extent of this rally, which is pretty impressive as far as I'm concerned. And this is like this, some of these stocks that aren't wanted. When you get the signals, when you get the signs, when you get the evidence, you've got to follow it and not listen to the fear and the negative signs that are going on. When you get a signal like this, and this has been a very good bottoming pattern, we can see the shift has gone from the sellers to the buyers, been a slow erosion. We haven't bought it till here. We waited for all this to happen. We waited for it to move above the average, do a trend reversal, the momentum index, all these things we've waited to happen, and we've been patient on this one. So it's just been a very, very, very good stock. Okay, so now what I want to go to is trading tactics. Okay, beaten down stocks. So portfolio update, which, well, I didn't actually go through that before, but we can see our conservative stocks still 5 out of 20, 25% equities, 75% cash. Our Energizer 5 stock and our 10 stock are both full and doing very, very nicely, thank you, at the moment. Okay, we've got some good stocks in there. Okay, so what I'm talking about today, and in the newsletter a bit more, is a bit about beaten down stocks, and they always provide a fantastic opportunity. I just want to talk a bit about what happens. So at certain times, the market sends stocks spiralling into our laps as fear takes hold, and we don't really actually recognise these opportunities sometimes when they are fantastic opportunities. Putting aside the media, putting aside the fear, putting aside what the experts are saying, look at what the charts say and look at what the prices are doing, and when they come back to a level, a lot of them have come back a long, long way. Okay, so a willingness to buy doesn't happen until you see the next guy have a go. It gives you a bit of confidence. Well, he's going to do it, I'm going to do it, the price is going up, and then you can't get in quick enough. And that can be that's often when you get that sharp burst higher, but often markets will come back and subside a little bit. So just the first one isn't always, you don't have to jump on it straight away. Quality stocks always provide great opportunities when a sell-off occurs. Okay, so be it Fisher & Paykel, be it Domino's, be it Car Sales, be it Macquarie Bank, be it Fortescue, there's a whole lot of them, be it Macquarie Bank, there's just a whole lot of them that we can talk about at the moment. So there are many ASX 200 stocks down by up to 50%, not all up by 50%. I mean, Domino's was down 70%. There's more of them are down 30-40%, like Wesfarmers and Macquarie, things like that. But they're all good corrections, and it's an interesting time to buy them. So I talked about Fisher & Paykel before, and that's the one that I'm looking at the moment. And again, when I talk about this, I look at this here and I see this is the first move off the low point, which is a really good point. But now for me, I still have a trend intensity rating of 96 there. It's still got more work to do for me to be convinced. I want some more substantiation of this, because this first rally will attract a wave of selling at some stage, which is what a trend reversal pattern happens, because you get the first wave up, then you get the pullback as the sellers hit the rally, and then hopefully you get a higher low which says the buyers are strong and the shift is turning. So that's what you want to see. So recoveries can be fragile and bumpy, so don't be too disheartened. We saw a big sell-off of DMP, Domino's, a couple of weeks ago, all of a sudden for 1 week for some strange reason, but it's back on its track again. Initial excitement can be infectious. Fear of missing out is a killer. Don't have to worry about it, just take patience, just be patient, things will work out okay. Buying weak is the strategy when the right signs appear. Stockradar strategy is conservative and waits for the substance of a trend reversal, which I've talked about. Okay, this often signals early sellers who have bought higher and out now. So the trend reversal is really saying you get that first rally off and the sellers hit the market and give you that pullback. And once that's all occurred, and then the market then does make a new high from that recent high, that's obviously saying that the sellers are now either finished selling or they're going to back off and let the market continue higher. So it obviously often signals early sellers who have bought higher are out now. So make sure you have a strategy to engage, and don't just see a stock going high and buy it, because you can get disillusioned very quickly. Remember, markets don't go one way, they go two ways, because things can happen. It's a bit like all of a sudden the inflation genie's out of the bottle last night and we're sort of exploding with enthusiasm. Whereas a week or two ago we couldn't have been more negative, but the market's still been climbing. So, we've got to listen to what the market's saying. It sends us a message. So, in the November issue of the Radar newsletter, I highlight over 10 stocks ripe for the picking in this sector. So it's a very, very good opportune time at the moment. Okay, so beaten down stocks, there is a fire sale going on at the moment. Fire sale at Stockradar with our new offer. So take it up if you can. Finishes on the 5th of December, and a fire sale of good stocks at the moment. So that's what we're all about today. I hope you've enjoyed what I've been talking about. What's happening at Stockradar, the newsletter's out. It's also going to be a major upgrade to our portfolio service very soon. It's going to be more mobile based, it's going to be web based, it's it's going to be far easier to operate and run. So for those of you who are interested in the portfolio service, now's the time to get a hold of that. Okay, so remember, beaten down leading stocks always provide an opportunity, but choose carefully. Okay, stay safe, watch your trends, heed your stops. Give me a call if you need any help. Love having a chat to your clients, and I'll see you all again next week for some more insights from Stockradar. Thanks very much for listening.